Okay. And what assets would you say that those are?
I think that, I mean, so for example, I think if you want to be in that bullish kind of tech area, I mean, I'm structurally bullish on Bitcoin still. Today it's been kind of bumping around 50,000. And there's kind of maybe some local excitement about it, but I don't think it's really widespread yet. And I have no particular view on what it does for the next 3 to 6 months, but I'm structurally bullish for multi-year view. For some kind of like lower volatility areas, I mean, I generally still find the energy complex pretty interesting. It's profitable in general. It's many of the balance sheets are pretty good. It's not expensive, and so you basically have this like long-term positive carry exposure to the risk of higher energy prices in the future, and you get paid to wait. That's what I mean by positive carry. So I think that's a decent, kind of a different type of position. I find select emerging markets interesting. So Latin America, for example, certain parts of Southeast Asia, we could see a China equity market pivoting to some extent, but investors have to be somewhat careful about geopolitical issues like tail risks that could occur. Kind of like how if investors were exposed to Russia, the war happens, and then they basically get all their assets sanctioned, and the company is still there. Just your claims of them are contested. So there's tail risks, things like that could happen to China. But basically, wherever capital's not heavily exposed to right now, but that still has decent fundamentals, I think are fairly interesting. I think that there's um, some of the kind of, if you look at, for example, the S&P 500, the normal one is market weight. There's an equal weight version, which sometimes outperforms and sometimes underperforms. If we do get a period of sustained economic reacceleration, then that equal weight one, which did way worse than the market weight one last year, could play a little bit of catch up. So there are many equities out there, either domestically or foreign, that are not that expensive. Even as other ones are. There's kind of a bigger than normal valuation gap between different types of equities. And so that's kind of how I'm viewing it. When I take on volatility, my preferred way to express it is Bitcoin and certain other select equities. And when I want to be defensive, it's things like short duration T bills, it's tips, it's gold, it's certain defensive sectors.